Welcome back to another edition of Special Situations Investing with Greg. This week I'm going to talk about fear as part of an investing special on Halloween. So check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Hello Investing Mutants. In full disclosure, this week I need to let you know I'm 100% invested, so all of my money is in different positions right now, and so I'm not actively seeking new positions because I don't want to do some things to get me out of the positions that I feel confident in right now. With that in mind, I thought I would pause for a second and talk about some of the mistakes, some of the fears that I've had and how I've worked to overcome them as I've participated in my investing practice. I think this is valuable for anyone that is investing, that follows this channel, that you guys take a look at it and you understand where I come from when I invest, because there's a lot of times when people don't realize what kind of motivations, what kind of experiences, what kind of position the person that is investing with them on a social media platform like YouTube, they may not know kind of where I am with this, and I want you as subscribers to recognize what kind of position I'm in so that you can understand how I can make some of the decisions that I make. So I'm going to talk about some mistakes, well, not mistakes, but some theories and understanding and principles that I think about when I invest, and how I deal with mistakes and how I understand them and failures in my investing practice. So with that in mind, here are 3 things that I deal with in order to invest or to improve my responses to mistakes and investing problems and issues. Number 1, the first thing that I do is I start with the assumption that I will always be incorrect. So I may be incorrect to a certain extent, always at one point or another, and I expect that I will always be incorrect with my investing practice. And the reason why I say this is because in today's modern world of investing complexity, you have all sorts of different areas where they can say, oh, well, this is how you invest here and this is how you invest there. Like you just go into the world of stocks, which is what we talk about, and it's so complex that nobody's going to be an expert in every single thing that goes on. And I get that. I also get the fact that I am going to be less than an expert because I am just learning on my own. And I think that is absolutely important, because if you recognize that you're going to make mistakes, it's going to cause you to say, okay, where can I go so that I can have less of those mistakes, and I can make sure that I'm making the correct decisions for what I'm doing. If we expand the investing universe outside of the stock market, and we go into like Bitcoin, or we go into real estate, or we go into small businesses, or anything, or private equity, any of those things, you're going to see that the people that are really successful are the ones that specialize. And the more that they specialize in certain things, they get better and better and better and better at it. And that's one of the most important things, in my view, when I think about understanding that I'm always going to make mistakes, is that I need to find places where I can continue to learn and I can focus on them, so that my mistakes will be fewer and far between. Or if they are, I make it so in such a way that they're not going to adversely affect me on the long term. Having this knowledge, you should understand that all of the investments that I put onto this channel, these are all related to me under that guise that I expect that I will make a mistake. And if I make a mistake, then I'm going to expect that I'm going to lose money in it. And so you should realize that every single one of these investments that I put out there, yes, there are times when I do well. I'm going to expect that I will lose money on some of these from time to time. It just is the inevitable. For that reason, I invest in I share these things on YouTube for a couple of reasons. There's two reasons that are really important to me as my own investing practice. Number one is I want to make sure that I have I create some sort of weekly accountability for myself, that I always have something that causes me to continue to engage in some sort of investing practice every single day or every single week. And the second thing is I like to create this. This is kind of my journal. And if you look back into my older videos prior to me getting a camera so you can kind of see my face and everything, you'll see that I spent some time talking about investing journals. And I think that is crucial to spend some time looking at that. The gentleman that I follow that has that information is from Careen Capital. And I found that is a very, very important thing to do, is have some sort of method or metric to come back and journal yourself to get yourself where you want to go. Now, there is a bit of psychology that goes into that, and you have to make sure that it's something that works for you. The videos that I put out onto YouTube are the things that work for me, but then I have to actively cause myself to disengage from the market and to disengage from what's going on with the stock prices, especially when I'm in a position like right now where I have 100% of my capital invested in special situations. So, in summary, the first thing that you should always pay attention to is that you will probably fail when you are investing. You're going to make mistakes. So accept the fact that is the reality that you live in. Number two is very closely related to this. And the reason why I think that it's important to think about this is once you recognize that you're going to fail and you're going to make mistakes, that will cause you to automatically create some sort of risk arbitrage. Now, politicians and pundits and stuff like that would say, oh, well, we need to make sure that we take away all types of risk because we're going to make sure that we're going to put on the oven mitts and we're going to hold the baby and be very, very gentle with them. But in reality, in my view, the thing that's actually going to make you more successful is that you recognize that there's going to be failure and you accept the fact that that's going to happen. And that gets you into this second part. And the second part is, if you recognize that you're going to fail at something, then you will never, or you'll do everything you can to avoid putting too much into a certain investment so that you cannot lose what you are expecting to invest. And so, or if you do lose it, it's not going to be critical to your long-term future and success. With that in mind, the money that I manage for myself, the money that I manage for friends and family, all of that money is in a position or is in an amount that is not going to significantly impact me or my family members. With that in mind, you should understand that I invest no more than about 30% of all of my household net worth into these special situations. Now, I recognize that because I'm going to make a failure from time to time, and I'm not going to always be perfect with these, I have to then realize, you know what? The most important thing is that I stay in the game. And if I can stay in the game, eventually, these failures that I have, as long as I do good post-investment analyses and stuff like that, I will realize that I've made a mistake, or more importantly, because I've made that mistake, I can look back and I can say, okay, what is it that I was thinking before? I can look back at the videos that I've done here on this channel and I can see what's going on. And then I can say, all right, what did I miss? And why did I miss that? And that is the important thing about recognizing failure and mistakes. You have to have some sort of feedback loop that tells you, okay, I've got to figure out how to move on. I can lose a significant amount and still go back and look at these things and say, okay, this is how I need to improve it. So number 2, in summary, is you need to make sure, or I need to make sure, that I never have more than a certain amount that will not adversely affect my lifestyle, adversely affect me if I make a mistake with these investments. So something to consider as you're going through this. The third one is part of the reason why I consider it, this is my Halloween special portion. And I remember as a child, you go out and you trick-or-treat for candy, and how much it was exciting to get all the candy. The funny thing is, investment returns, especially if they are excessive, they create in us an innate sense of an element of greed, just like the child that goes out and gets the candy and they have this entire bag of candy, and then they're like, oh, but my brother or sister got more, or my friend got more, and they got a candy bar that I wanted that I didn't get. Those types of things still happen, and that greed, that's the scariest part about investing, because greed will creep in on you very quickly, and it'll cause you to make mistakes. And this is where that FOMO idea comes from. This is where a lot of the ideas of, oh, well, you know what, I got to put money into the market every single time, even if I haven't done all my research. No, this is that moment where you do make a lot of mistakes. And to me, it is the Halloween version of it. It is like the ghoul or the ghost that's out there that causes you to make the biggest mistakes, and that is this greed. I have found that every time I've looked back at my investments that I've really made big mistakes on, it's because I got a little too greedy on what was going on, or even the ones that I've kind of had to finagle in order to get out of them. It was because I just got too greedy over time, and I realize now, the more that I do that, the more I need to limit my exposure to things that cause me to be greedy, and accept what I'm good at, get really focused in on it, and then accept the fact that I may or may not be able to get all of the percentages that I'm shooting for, but I will get there eventually. As our Halloween special concludes, I ask you just a couple of questions. I'd like you to share in the comments below. Let me know, what is the thing that has caused you your biggest fears when you're investing, and how have you overcome that? How have you overcome those mistakes that you've made? So I appreciate you watching, and we'll catch you next week. Thanks a bunch.